Hello and welcome. This is from the CBN. We bring you weekly reports and expert analysis of the actions, policies and economic initiatives of the Central Bank of Nigeria. I am Misi Dada. This year's Bankers Committee retreat, which held mid-December, provided a unique platform for the banking industry to collaborate and review banking system developments during the year and determine outlook for the coming year. During the two-day event, there were presentations from various thought leaders and industry players, including financial services industry, who shared insights that will help sustain specific progressive-led programs to position the Nigerian economy for inclusive, sustainable recovery. We spoke with one of the thought leaders at the event, and that will be our focus in today's episode. Stay tuned. We'll be back shortly.
North, South, East or West, male or female, old school or millennial, rural or urban, the Naira is the same, and so is the e-Naira. The e-Naira is a legal tender issued by the Central Bank of Nigeria. So, let's embrace it. The e-Naira will foster financial inclusion, improve access to credit, facilitate cross-border remittances, and it's easier to transfer. E-Naira, same Naira, more possibilities. This message is from the Central Bank of Nigeria, CBN.
Welcome back. You're watching from the CBN. Professor Ken Ife is a development consultant and lead consultant, Industry and Private Sector Development, ECOWAS Commission. He shared with us highlights of his presentation at the annual Bankers Retreat, as well as his thoughts on other economic issues. Professor Ken Ife, thank you very much for coming on the program.
Thank you for having me.
It's been 2 days of intense deliberation by the Bankers Committee, and you gave a presentation on Nigeria economic performance, trends and outlook for the financial system. Would you mind giving us a summary of what your presentation was all about?
My presentation was consistent with the theme of the meeting. The theme being to see how to build resilience into our economic recovery and growth. And if, in fact, in that process, how to achieve inclusive growth. So I looked at the global picture, the regional African and regional, sub-regional ECOWAS regimes, and compared Nigeria to some of the comparator nations, and then drill down on the Nigerian, an overview of the Nigerian economy. And I had to look at the major macroeconomic parameters to see how they have fared over the period, and then projected to the future to see what could happen, various scenarios to the year 2050, which is medium term. And also, I looked at some of the challenges, and I looked at what the budget, the new Nigerian medium-term plan, what plan they have for the financial sector. And it's very remarkable because whilst as a country, our medium-term plan expects investment of about 350 trillion naira. Federal government was only projecting to put in about 30 trillion, all the subnationals about 20, leaving the private sector to come up with almost 300 trillion. So it has to dawn on them what the nation expects them to do. So the key player in this is the financial sector. They are the ones to raise the money, that investment. So it came in handy because it now got them thinking about how the hell are they going to raise this order of investment for the country to pursue the growth agenda. And that was the beginning, the opening salvo for us to now begin to look at certain parts of this jigsaw. Obviously, having delivered on that, I now had to zero in on the financial sector to look at their own performance, their operator performance. I mean, looked at the state, the federal government performance, the country as a whole. So I had to look at the financial sector, the kind of exposures that they have, and what the predictions are for the health of the financial sector. We're not doing badly. That is based on the report of the last Monetary Policy Committee communique. The indices are very favorable. Their non-performing loans come down to just over 5%. The capital adequacy ratio very well, over 15%. Benchmark. All the indicators are looking good. Liquidity ratios looking really good, above 30%. So the health is really intact. So they are not being damaged by the COVID. If anything, they grew double digits in the last year. So commended them on that. But then, of course, the challenges going forward is that as like other nations, the debt overhang is quite substantial, and the exposure of the financial sector to oil and gas, the risk of oil and gas is quite intense, and I had to bring the message home to them. What they have to do, because
and what might that be?
Many things. If you look at the likelihood of beginning to phase out the statutory forbearance, which allowed them to restructure the loans. Now, if that begins to taper away early next year, then they will come under pressure, because don't forget they've run for 2 years with interest rates dropped down from 9% to 5%. For intervention funds. They are now going to begin to send it back to where it came, which is 9. So obviously that could cause more increase in non-performing loans, and so that's going to hit the loan book of the commercial banks. And then of course there are other things that are going to happen: investment, foreign direct investment, and portfolio investment. Those ones are not coming either, because they're also facing the prospect that bigger countries led by America are going to be ending their quantitative easing and begin to normalize their monetary policy, which will bring pressure on us, and also which means that their lending rates will all go up. So that's going to have a knock-on effect. So some of those were raised, and they had to look at those.
Now, from what you have said, it appears that bank customers have to brace up for the coming year, just as you said, the forbearance coming to an end and all that. So what will be the implication, and how should bank customers prepare ahead in the coming year for all these eventualities?
Well, the thing is that the bank themselves are aware that things are getting even tougher for them, because there are so many people looking for their lunch. Like the payment services companies, you have the mobile operators, payment, all kinds of manners of people are coming in for their lunch. So you now find that more people are using digital payment systems. They are going to be, not how many people want to go to the bank to carry out transactions, and there's POS, so that payment infrastructures that are making payments easier. So all of those, including of course digital channels that are being opened, you know about cryptocurrency, you have the e-Naira as well coming in. So some of those are going to be very, very challenging environment for the commercial banks. So they're going to be struggling for their customers, because their customers are going to be walking into easier and greener pastures to do their business. So while at the same time, the lending conditions are likely to tighten because of lower performance. Like the loan non-performing loans are going to increase, and as soon as they begin to increase, the banks tighten up on lending criteria. So, and the same thing abroad as well. When these easings are ending, the quantitative easing, the borrowing becomes tighter. Conditions for lending to countries become also tighter. So all of those environments are ones that we say that the commercial banks have to get more involved in technology, because in fact one of the things that I showed them was the breakdown of what the national medium-term development plan projected as the size of the industry. For example, for the banking sector, we are looking at them to grow from just about 121 trillion to about 500 trillion. So that means that the industry will grow by anything between 120 to 50% to 200%. So what investment would the bank need to make? What infrastructure do they have to put down to be able to handle that order of business? And I told them it's certainly not going to be more branches, it's certainly not going to be more employees, it's just going to be more technology. How you embrace technology in the things that you do so that you can reduce your costs and be a bit more profitable. So those are some of the challenges, and of course the borrowers are on the line.
Oh, I see. Just hold on. In that case, let me call out my PIN. It is 41.
Uncle, please stop.
Stop what?
You're giving someone else your personal identification number PIN?
Not someone else. It's from my bank.
Please hang up, Uncle. That's a fraudster.
That's not true. But they call out my full name. I am sure this is from my bank.
Uncle, no bank is ever going to call you to ask for your personal identification number PIN, your mobile banking password, or your card verification code, CVC.
But it sounded so genuine.
Yes, hackers and fraudsters always sound genuine. But please, Uncle, don't fall for their bait. Don't respond to any phony emails, text message, SMS, and don't click on any link you're not sure of.
Even if they call your date of birth or your BVN, don't give them your security details.
If you suspect any issue with your account, please go to your bank.
Oh, I see.
This message is from the Central Bank of Nigeria.
Now, the Central Bank of Nigeria has made it clear that what gave rise to the interventions that they come up with is gap. When they notice gaps in certain sectors of the economy, financing gaps, then they come up with innovative ideas of how to fill those gaps and ensure that there is credit to critical sectors, the real sector, the health sector, the SMEs. But critics have been talking about the CBN and the interventions. Some have said that the CBN shouldn't be involved in certain things, that should be left to other agencies or ministries of government. What's your take on that?
Well, I think first of all, the core mandates of central bank are one, to promote. First of all, actually, is to maintain financial system stability. That's the first core mandate. Another one is to maintain price stability. But there is a secondary mandate that requires the central bank to promote sustainable economic development. And even with that, there is also, it is a lender of last resort. So central bank watches how the economy evolves and then may be forced to intervene when, for example, there is market failure. We have noticed that there's market failure, or what you call the gap in financing. Market failure in the sense that the financial sector does not lend to a particular sector like agriculture. The risk involved in lending to agriculture, for example, is so high that the sector cannot develop. And is our natural economy, and is an area of our natural advantage, and is a bigger employer of 60% of our workforce. So we cannot let that happen. So there are this and certain other circumstances where the central bank will need to intervene, because if you leave it to the market alone, the market will not correct itself. So, and this intervention is not forever. It does it for a finite period of time. And then as you can see that WISE is intervening in some area, is also trying to encourage the banking system, to lend more using all instruments in its disposal. For example, it has used loan to deposit ratio, increased it from 55% to 60% to 65%, so that the 65% of their money is actually given out as loan to real sector. It's also used other ratios, like, in fact, it's even asked them to come and take, they are obliged to keep 27.5% of their money as reserves. And the bank is now saying to them, this money you've keeping with me, over 4 trillion, that doesn't earn interest for you, come and take it and lend it out to real sector in a medium term, 7 years, a 2-year moratorium. So all of these are just encouraging them to lend more, to be more active in building the economic base in the country. So that is a very important role that the central bank is playing. And many people, it will never satisfy everybody. People will always have something to say. But they need to, the taste of that pudding is in the eating. You see the trouble that we have, which is a monocultural economy, is never able to give us all the money we need to deal with our import. Neither can we bet on all of that money, because the forces are exogenic. It's not under our control. One day you can't export, the other day you reduce your production volume, you can't control the price. So government can't deliver their budget because they can't find the money. And even where you get some of the money, you can't get the foreign exchange, because the bulk of our foreign exchange is coming from the export of crude. So that market has to be diversified, so that if you have any shock, exogenic shock on the oil and gas, then other revenue bases will support the economy and stop it from going into recession. And that resilience is what is the objective of central bank intervention in the economy, to widen the participation of more people in the economy, to diversify the economic base, the export revenue, to ensure we have export-led strategy, export-led growth strategy, and then you have backward integration because we are just an import nation. We have to start using what we produce, eating what we produce, and producing what we eat. So these are cogent strategies moving forward to deal with the structure and the challenge that we are facing as a country. So I think people don't seem to understand the gravity of the intervention of the CBN in this particular area. And we have to keep educating people, and they do advocacies for them to understand what exactly is the reason and rationale behind what is being done.
Let's talk about the attitude of citizens, which has in some way led to inability to recoup some of the interventions back. Because some believe that when they receive intervention from the Central Bank of Nigeria, it's part of their rights, like it's a national cake. And so they do not have the intention of paying back. How should that be managed?
Yes, the tendency is always there for people to feel that it's a national cake. After all, 500 billion every year for the last 6 years is being used as social intervention fund, distributing money to people. 5,000 naira, as well as some useful ones. So people will still see, well, where is our own? So farmers might think that this one is our own. But it cannot be, because this is depositors' money. And in the same way, you asked me, why are the ministries not taking the lead? For goodness sake, over the last 6 years, the government's budget plus the money they borrowed would not be less than 60 trillion naira every year. Add all the money for the whole year, 6 years. And who has been spending that money? It's still the MDAs, it's the ministers, it's all the people that are the ones spending the money. And it's government money, the one they borrowed, they give grants, all right? You cannot tell me that after spending that 60 trillion, then when the central bank goes to the bankers committee and all of these people to get this money, depositors' money, they will still take that 1 trillion and then give it to politicians to go and distribute. That's not going to happen. Because you now want to spell doom and disaster to our financial system. They will collapse because you are going to create confusion, and they will not even produce the food that will be giving them the money.
Is there a way to restructure the psyche and the understanding of
That will come.
beneficiaries
No,
of
that
this
will come
intervention?
over time. So my advice to CBN is don't be discouraged by the fact that some people are still not paying their loan. In fact, push from 4 million to 10 million farmers. Just keep giving the money and tightening the conditions under which you are giving them the money, but keep going, because the forces of the good will surely overcome the dark forces. So more people will begin to see the necessity for them to repay. We're going to be seeing the outputs. We're going to be seeing the transformation going on with the manufacturing sector. So over time, and they also have a methodology for dealing with delinquent loans, because they have a GSI, the general standing instructions. So when they are ready, they will just clamp on their money in any account where it is. So that will go.
To wrap up now, I want you to give us your outlook for the Nigerian economy in terms of the gross domestic product inflation rate, foreign direct investment, and the likes. What's your projection? What do you see in the new year?
Well, I see the inflation continuing to be subdued because we expect higher yield now, and we didn't have flood. There, of course, there's always that peak, that tendency of heavy expenditure during Christmas. So that's going to dampen the level of drop we would expect from this. But in terms of GDP, I expect it to go up, and I expect it to be over 3% in the last quarter, which means that we are going to finish up strong. At the moment, the average over the last 3 quarters is 3%, just over 3%. So if we can make 3, then we will finish up, at 3%, which is higher than everybody's expectation, everybody's projection, going into 2024. Because at the end of the year, we normally get the highest that we can get in terms of GDP growth, because of the expenditures that happen in that period. Then, in terms of inflation, is going to temper. Then, in terms of employment, we're also going to see a bit more employment, because when you are spending that, jobs follow it, don't you? There is more expense, but not to dent the unemployment figure of 33%. But you will see some light in the end of the tunnel. And I know that this particular scheme, 100 for 100, will create a lot more employment than anything else. And the employment it will create will be sustainable employment, because they are going to be closing the weakest link in our economy, which is the link between agricultural production, primary production, and secondary production. But the bigger plus for Nigeria is that our non-oil has now outperformed oil revenue, but in terms of GDP growth rates. So which means that even if we have shocks now, exogenic shocks on oil, they are unlikely to drag us immediately into recession because of a higher performance. In fact, next year, we expect that the oil contribution to government revenue will drop to 43%, no longer 55%. So that means there's more resilience being built into our economy, management of our economy, our revenue, resource mobilization of our economy.
What about our balance of trade? Can we talk about that?
That's a disaster at the moment. I'm sorry to say that, because we have minus 3 trillion. And I feel so strongly that Nigeria needs to do something about China, because we have China importing from China 2.44 trillion naira, unbelievable, with nothing to show on the export side. Unlike India, where we have a balance of trade, we have over 700 billion in import and 700 billion in export from China. Perfect. The next one is Netherlands, like half. But the no-go area is China. Who can do it? It can go on like that.
All right. It's always a pleasure to talk to you, Professor Ken Ife. Many thanks for your time.
Thank you.
On the program.
Thank you very much. Always a pleasure.
Welcome back. And if you're just joining us, this is from the CBN. We bring you up to speed on the actions, policies, and economic initiatives of the Central Bank of Nigeria, CBN. The Tertiary Institutions Entrepreneurship Scheme, TIES, is a financing program meant to stimulate the entrepreneurial spirit among Nigerian graduates and undergraduates. TIES will bridge the financing gaps that have previously prevented young Nigerians from accessing low-cost credit to drive development of business ideas. You can also be a part of the scheme, or you may know someone who should. Encourage them to apply. That's all from the CBN this week. Download the eNaira wallet if you haven't already. Remember, you can report unresolved banking issues to the CBN Consumer Protection Department through the email address cpd@cbn.gov.ng with relevant documents. You can also call the CBN contact center used on the phone line +234 700 2255 226. Local rates may apply. Keep sending your comments to the email address from the CBN@gmail.com. Follow us on social media platforms, including YouTube, Facebook, and Instagram for updates and uploaded episodes of the program. We invite you to join us again next time. I am William Misidada. Have a very Merry Christmas.